Let's take a look at the very latest in the world of business. Global worries over high inflation and world recession fears remain to feature in market activity. Meanwhile, the dollar continues to recover while the rand has slumped. Head of FX Execution at Rand Merchant Bank, Matete Thulare, joins us now to talk through all these developments. A very good morning to you, Matete. Thanks for joining us on Newzroom Afrika. The rand has gone over the 17 mark again. Talk us through this development.
Good morning. I suppose, as you say, the rand is obviously hovering around the 17 levels again. And we kind of, close to that 17 high of 2022. So obviously, it's taking a hit from signs that the worst is yet to come in terms of interest rate hikes. I mean, we've lost more than 4% against the dollar just last week, as the U.S. currency has forged higher on global markets. I mean, if you think about the minutes that were released from the U.S. Federal Reserve last week, they confirmed a really hawkish stance towards inflation, offering the prospect of a really restrictive monetary policy for a really extended period to bring back inflation below the 2% or, just about the 2% mark from an 8.5% mark that we saw in July already. So global markets have been in recovery mode over the past few weeks, and it's also been boosted by better than expected earnings reports from the U.S. Companies that have shown their data over the past couple of days. But data showed on Friday from, the Eurozone inflation that it's hit a record 8.9% in July, whilst the markets obviously this week will also be monitoring the Caxton Hole Symposium on Friday, where Jerome Powell, who is the Federal Reserve chairperson, he'll be giving a speech. And I think the markets will really be guided in terms of what the U.S. inflation trajectory will be looking like over the next couple of months. But also, if you think about it, the rand has lost about close to 60 cents just from last week. We were at around the 16.24 mark last week, Monday. And I think with no major data expected this week, all eyes will be on Jerome Powell on Friday, which will obviously give us direction in terms of where the U.S. economy is headed to in the last 3 months of to close of 2022.
So what's expected then in global market activity following the U.S. and Chinese economic developments last week, as well as news of Europe slipping into recession?
I think if anything, the roller coaster ride is really going to continue into the close of 2022, regardless of any asset class or industries. We are going to experience extreme volatility as markets bounce between headlines of resilient labor markets in certain countries, gauging inflation. And I think we always speak about the two I's at this point in time, being inflation and interest rates. And I think we also need to be mindful about the fears of a recession and also the geopolitical tension that is rising around the world. I mean, we have seen it out in Asia coming through between China and Taiwan, and obviously what has been happening over the past 6 months in Russia and Ukraine. But also, if anything, gold prices at this point in time have also followed through and obviously are showing a bit of weakness on the back of all of these.
And what is the latest then on the commodity news rates?
I think if anything, there's concerns about the Chinese economic slowdown. Obviously, that has sent rumbles through global markets as the lower interest rate environment there to keep the economy stimulated amid the COVID lockdowns. I think one thing that is certain there is that the inflation control, the economic stability, and the security from international threats is going to be top of mind in China. But if anything, we have seen gold prices being supported around the 1740 levels, whilst the resistance is around the 1764. But as we've seen over the past couple of days, gold prices have fallen for about 6 straight sessions. I think this is the hit in more than 3 weeks, obviously really weighed down by a robust dollar and also expectations of further interest rate hikes. On the back of that, we've also seen a weaker commodity price in the form of oil that is still trading below $100 a barrel. But if anything, that also bodes well for the South African economy, because despite the weaker rand, the lower oil prices, we are factoring in a close to 2 rand decrease in petrol prices as at the end of next week.
And looking at company news, Matete, tell us about Health Square's medical scheme applying to be wound up.
So that's another casualty of the COVID-19 pandemic. I think with the company obviously taking steps to voluntarily wind up. I mean, already they've sent their members, which is about 48,000 members, and their beneficiaries, they'll be without medical cover from the 1st of September. Now, they sent an SMS to all their Health Squared members last week Friday, and they also showed a letter that was dated the 18th of August, which was signed by the scheme's principal office, informing them about plans, to voluntarily wind up the scheme. And I think, the letter obviously advised members to seriously consider taking steps to secure new membership at other medical aid schemes effective from the 1st of September. Now, I think they mentioned to their members that they'll try and help them and obviously assist them by providing the necessary information to apply for membership at new medical aid schemes. I mean, already the likes of Discovery has stepped up to obviously trying to assist some of these members. And obviously, Health Squared has said that they'll issue membership certificates, and obviously advising that as much as they are winding up, it is a solvent business which has assets that obviously exceed their liability. So this is an unfolding story, and we'll see, over the next week how it actually unfolds.
And very lastly, before we let you go, what's the latest around Caxton and Impact's merger amid that reported snag?
So I think it's a very strange statement that was released by Caxton on Friday afternoon. I mean, we do know that there's been long simmering tensions between the packaging producer Impact and the publishing and printing company called Caxton that has erupted over the past couple of days. Caxton owns 34% of Impact, and they want to take control of the group. So this is a hostile takeover if you think about it. Already Caxton has released a statement that, they are denying any ulterior motives for them voting down Impact's non-executive director's remuneration policy at the recent AGM. According to Caxton, the Impact CEO has told the investors that two companies are not reaching an agreement and consensus. But I think Caxton has said that this is not the case, and they want to obviously have a very vested interest in Impact and obviously making sure that they have success in Impact, and that's why they want to take over Impact. But already Caxton has accused the Impact board of filing secret representations and affidavits before the Competition Commission and Tribunal, which says that it will stall, the takeover that is going to take place. But already Impact has said, they strongly denying all these allegations. And I think at this point in time, it's going to be a back and forth in terms of this hostile takeover. We have seen that these can get nasty and dragged out. So I think if anything, the Impact board have said that they've not received any offer from Caxton, and should they receive this offer, they will obviously take an assessment and obviously do their due diligence and also ask for recommendations from shareholders before they actually go back to Caxton about the takeover. So it is going to be quite interesting how this actually plays itself out over the next coming days.
Very well. Thank you so much for that breakdown. The head of FX execution at Rand Merchant Bank, Matete Thulare, with the very latest in the world of business.